Buenos días, buenas tardes a todos los que nos están viendo desde la casa y a las personas que vinieron aquí a visitarnos el día de hoy. Mi nombre es Deicy de Crosscountry y bienvenidos y gracias, muchas gracias a Partnership Realty que nos deja hacer estas clases para ustedes. El día de hoy vamos a hablar sobre un programa... Oh, sí. Sí. Ok. ¿Otra vez? Okay. Okay, so today my name is Deicy Angel. I'm from Crosscountry Mortgage, and thank you everybody for being here, and of course the people that are watching up from your house. My name is Deicy from Crosscountry. So today we're going to be talking about a bank statement program. So we have different type of clients. The clients that are usually W-2 or the freelancers or self-employed borrowers. So today we're going to only be talking about those people that are self-employed, that get paid either 1099 or that they get paid cash. Well, not necessarily cash, but of course they need to be paid with a check from another company. So as you know, like a W-2, we go by based on how much they make. If they get paid salary, that's how we're going to be calculating the income. But of course, when we see that self-employed borrower that makes good money, but at the end of the year, they write off a lot of expenses, unfortunately, the normal standard FHA and conventional loan, they don't qualify for those because the income gets based on the net income, not the gross, what they make. So for that, we have a program. It's a bank statement program. It divides into two different ones, which is going to be expanded. And then another one, but we'll talk about it, the different ones in a little bit. But the business, so what we're going to be talking here, I'll show you. This is my information. I'll send you this PowerPoint at the end of the class. So like I mentioned, this is a bank statement that will be more towards those self-employed borrowers. And then in that case, the lender, the investor that we're going to be doing the loan with, they don't require the standard W-2s or pay stubs. Instead, we're going to be looking at bank statements only, okay? Of course, we're not going to be looking at the first page of the bank statement. We need all pages of the bank statement because we're going to be getting the income from there. So we need to see every single bank statement. And I'll tell you how many we need in a few. Okay, so here it is. No sé. We're gonna have Diana, she's gonna be doing a summary at the end of the class in Spanish. So Diana va a hacer un summary en español, okay? Bien pequeñito. So the bank statement program, we can do either 24 bank statements from the client or 12 months bank statement. So what the underwriter is going to be doing, again, they're going to look at the bank statements and see what type of income it shows in there, deposits-wise. And then out of the deposits, they're going to get 50% of the deposit, and then they'll deliver the income from there. We have different ways to do it. Either we get business bank statements only, or we get personal bank statements. Sometimes the client will have come and go bank statements or accounts, which they deposit personal, and then they also deposit business. So they use the purpose of that bank account, they'll use it for personal and business. So we can use that account as well. Now, if we go by the 12 months bank statement, the underwriter is going to require a CPA letter saying that the person, the owner of that account or the business that we're using is in good standing, because they want to make sure that the business that we're going to be using, of course, they don't want to do a loan on a business that is going to be closing. And also that they want to make sure how much percentage they own on that company. So let's say we have a borrower and they have a company with other people, and only 25% it's use, or the borrower only has 25%, we can use that account. We can use that business. But if it's less than 25% ownership, unfortunately, we're not going to be able to use that bank account. Now, one thing that we need to be very important of is that, let's say I have a company, right? It's going to be AB Transport. And I own 50% of that company only, and the other 50% is owned by other people or another person. The deposits that are going to be on that account, let's say on that business account, I can only use 50% of that deposits because I only have ownership of 50%. I don't own the whole company. And then out of that 50%, the underwriter is going to take another 50% to calculate the income. Does that make sense? Yes.
So if you have 100,000 in gross deposits, the underwriter uses 50 to qualify for the income.
Yeah. So the question, if it's the borrower has 100,000 in deposits, if the underwriter is going to be only 50. Yeah, they're going to be looking at $50,000, but out of that $50,000, half of that is going to be your monthly income. Yeah, so it's going to be 25,000. Yes. Now, if he owns everything, 50,000 is going to be the monthly income. And then I already mentioned the CPA. So this is, again, this is for those clients that we don't want to use the tax returns, or we don't want to get the tax transcripts from the IRS. They do require a credit score. So our client do have to have a credit score. The minimum credit score for the bank statement program is going to be 620. Now the down payment, usually, you know, for FHA, there's a down payment. Conventional, there's a minimum down payment. The client can go up to more, of course, if they want to, but there's always a required down payment. In VA, they don't. Now, for bank statement program, the minimum that the client needs to bring as a down payment is 10% for primary properties. Now, if it's going to be an investment or a second home, it's going to be higher. It's going to be 20%. They do also have a debt-to-income ratio. So they'll see how much income we deliver from those bank statements and how much is the monthly debts that they have. So the debt-income ratio is going to be up to 50%. Of course, there's going to be cases that is going to be less than 50%. 50% usually is what is required, but it can go up to 55%. So I mentioned the 20% down for second homes. Now, the type of properties that we can finance through that. We can do single family, and then we can do units from 1 to 4, and then we can also condos. Usually we run into problems with condos on a standard conventional FHA because they're not, you know, they don't have, you know, the budget doesn't pass or too many rentals. In this case, they don't look at that, okay? So that's something good. Okay, so the limit, how much our client can borrow. They can borrow up to 3.5 million, so that's big, that's huge, very, very huge, compared to, of course, the standard conventional. They do have limits. This one, as you see, 3.5. And then the credit score, and then the DTI. So far, do you guys have any questions?
On the 2 years income, they take an average?
They do. So the way they're going to calculate their income, there's going to be a worksheet, and that we'll have to look at every single bank statement. So the worksheet is going to have every month, and you have to put how much they put on, how much deposits, how much the total deposits were. So for January, they'll put all the deposits, February, and stuff like that. And then the worksheet, actually at the bottom, it will tell you an average. So there will be, it's just like a normal self-employed borrower with tax returns, but in this case, instead of using tax returns, they're going to look at deposits, and then they'll do an average. And we have to take in consideration also if the income is increasing or decreasing, and I will go into that a little bit more in details later. But that's a very good question. So we already said not warrantable condos allowed. Primary, second, oh, those are the types of occupancy. So we can do, if the borrower is going to leave, it's not only investment properties. We can do primary, we can do a second home, and investments. Now, the type of terms of the loan, there are different types. So we have the 15, the 30, you haven't heard the 40 yet. Usually it's up to 30. But we can do 40 fixed and 10-year interest only. So I try to always put only fixed, interest only, well, varies. The client is really the one that decides how to proceed, of course. But of course, you want to guide them to a more favorable loan, whatever works more for them. So I usually do a fixed loan, so the interest rate is not going to go up and down. It's not like an arm. Now, there is a prepayment penalty for investment properties. For primary properties, there's no prepayment penalty, meaning that if the client decides to pay the mortgage beforehand, like years before, for primary, there's not a prepayment penalty. Now, for investments, yes, there is. And it's going to be in case that the client pays 20% of the original loan amount within a year, there's a 0.5 point prepayment penalty. And that's based on the original loan amount. And that's going to be, when the client signs the disclosure, that's part of the disclosure. She says there is a prepayment penalty or no. So they're going to be aware of that. Now, the deposits, that's very important because sometimes the client puts cash, and unfortunately cash is not going to be one of the deposits that we're going to be able to use as part of the income or the total deposits reflected. So when we were doing that, when I was mentioning that the underwriter is going to be doing a calculation of all the deposits for every single month, they put all the deposits, but next to it, they're going to deduct any deposits that cannot be sourced. Example, cash, or if it only says deposits. Unless we document that the deposit or the funds originated from business, then we can go ahead, like let's say services or something like that, then we can go ahead and put it back. Otherwise, we cannot use that. So it's very good if, let's say, we find, or the bank statement actually shows where the funds came from. So if I have a company and then the deposit says $10,000 from another company, then it makes sense that it's originating from the business itself and not cash. So it's not eligible if it's not from the business. This is what we were talking about increasing or increasing. So if the income is decreasing, then more than 10%, then from the past months, the program, it's not going to work for the client. Now, if it's 5%, it's going to be lowering 5% from the previous, then it's allowed. Now, it is between 5% and 10%, the underwriter is going to require some type of documentation of why or reason why. Maybe the company usually makes more money during the summer or at the end of the year, and that's the reason why the deposits are not as much during those months. But they do require a letter explanation, either from the CPA or from the borrower himself, signed. Any questions? Okay. Now, the thing that it says 3 non-sufficient funds, that means that the borrower needs to, on the bank statements, they're going to be looking at whether the bank statements have fees for not having enough funds to pay out. So meaning that, let's say the borrower did all the deposits and then they have an automatic payment and the bank went and paid and there was not sufficient funds in the account, then they're allowed to have up to 3. If it's more than 3, then that's not gonna help the underwriter, because they're gonna see, well, you're not gonna have sufficient funds at the end. You're not making sure you have funds to pay out the debts. Okay. Do you guys have any questions? Sarah, do you have any questions for me?
No, we're good.
We're good.
One question.
Yes.
Is this only for purchase mortgages, or it could be for refinance?
Oh, very good question. If it's only for purchases, and they're asking me if the transaction, the bank statement program is only for purchases or refinance. We can do a refinance as well. And we can do non-cash out or rate and term and stuff like that. Now, the interest rate, now that he was asking me the question, now the interest rates are actually a little bit higher than the standards, and there will be a point, around 0.5 of origination fee for that type of program. I will say I did one loan, the last one that I closed, it was about 4.875, if I'm not wrong, the interest rate, which it's higher than the standard conventional and FHA, but because you have that ability to do the bank statement instead of doing the tax return, sometimes the clients will like to put the 10% down towards the house instead of doing it with the tax returns. Okay. Yes.
I have three questions.
Sí.
The last one is, because you say something, the interest rate you can lock up, no?
You can look,
Lock up.
yes, you can look, yeah, if you,
Interest rates, this is one of the questions. Because you say the last closing was 4.8, but if you give it to a client 4.5, the peso can lock, and on the day of the close, the interest rate will increase.
okay.
30 days, not for that.
Yes, well, let's say we're doing a transaction for, if we can lock the interest rate. Okay, so if we're doing, let's say, a purchase and we have already a contract, not doing a pre-approval, but already a contract, then we can go ahead and lock the interest rate depending 40 days, 45 days, 30 days. Then once you lock that interest rate, then you're gonna be with that market. Sometimes the borrower will like to pay down or buy down the rate, so they can actually put points or pay points and then lower the interest rate. They can do that, and they can do it after. It doesn't have to be the same day. They don't have to make that decision the same day that we locked it, but it's gonna be locked with that market, with that to the date that we locked the interest rate. Did that answer your question?
I have another one.
Okay.
And this part, the person need to keep the same job for over 2 years, no? You cannot change job every 3 months, 6 months. You need to keep the same job on the same industry. But you
Okay.
can be approved by the underwriter, no?
Okay, they're asking me if the borrower that is gonna be doing the bank statement program has to be with the same job in the last 2 years, in the same industry. Well, if they have a business, when we're using a business, they have to have that business for more than 1 year. At least 1 year is the minimum, at least one. Personal or business can be. It can be a personal or it can be a business. So let's say I have a nanny, okay, and the nanny doesn't actually open up a business with Sunbest. That's the website that we register the business in Florida. But she has a personal bank statement and she deposits all her checks as a nanny in there. Then she has to have that history of being a nanny for at least 1 year. Now, if it's a person that actually have a business, then that business has to be reported with Sunbest for more than 1 year. It's better, if, of course, if they have a history of 2 years, but they need at least 12 months. Okay.
Thank you.
You're welcome. Any other questions?
I have one question. This program work with IT buyers?
No, it does not work. It does not work with IT. They're asking me if the bank statement program works with somebody that has an IT number. No, unfortunately, no. You do have to be a citizen or okay. The IT program, we're gonna be doing one class with IT because we got a lot of questions.
With the 25%
Yes, it's a different term. Yeah, it's a different term, it's different documentation too. Okay. Any other questions? No? Yes, one more question.
Some people have multiple sources of income. They might be a real estate agent, they might be an insurance agent, and would you count those together as,
Yes,
how would you, if they're putting money into, say, one corporation or one bank account?
into one account from different source of income. Okay, they're asking me if, let's say, I have a client with different sources of income and they deposit that into one single bank statement. Now, let's say it really depends because I will say that we'll have to go to an actual request through our estimator desk, and then they'll have to do they have to review it. So let's say I had one client recently that we did the bank statement program, and her case was that she was purchasing the house that she was living with her husband or her partner, not her husband, but the partner was the one owning that house. And he wanted it to give every single rights and the mortgage over to the wife. Now, in that case, she didn't have to bring any 10% down because we did a gift of equity. So all the transaction was done with zero. Actually, the seller or the owner of the house, he received funds back. So the way we did it, we did a gift of equity. So we transfer everything to her as a purchase, the mortgage and the title because she was not on the title. And at the beginning, the underwriter was telling me that she needed to put the 10% down because she never had a payment under her, or like a primary housing expenses. But we were able to get an exception on that one. So I will say it really depends. I will say that it could be, but if it goes base to base. I will say that it's possible, but we will have to go through an underwriter and get it approved. Okay, any other questions? I think that's good. Alrighty, thank you so much. Again, this is Deicy Angel from Crosscountry, and we're here at Partnership. My contact information is gonna be at the end of the slides. If you have any questions, if you want me to send the PowerPoint over to you guys, I can go ahead and do that. Okay, thank you so much.
Thank you.